Qualcomm looks to be a fantastic semiconductor to invest in. We're going to run through why in today's episode. We'll talk about their historical performance. We'll look at their income statement growth year on year as well as their bottom line net income. We'll look at the health of the company, total cash versus their total debt. We'll also compare to how they've performed versus some of their competitors over the last few years, and the results may surprise you. We're going to take a look at some insider selling that has been done over the more recent period with the CEO. We'll look at the institutions who seem to love Qualcomm. They do see it as one of their favorite semiconductor companies. We'll talk about their dividend safety. We'll run through some of their financial metrics, some that we love, some that we want to point out as a red flag potential indicator. And we'll take a look at why Qualcomm could be a fantastic top AI stock for 2024. And we'll very quickly run through their earnings for those that did miss, which they had some very, very strong beats. Now, in terms of this company, before we do, we're going to take a look at their earnings, which was a very strong performance. We'll run through some of the numbers. And as always, we will run them through the valuation model, getting to the intrinsic value as well as the acceptable buy price, given our investor margin of safety, and look at Wall Street to see what they forecast over the next 12 months. So let's jump into our analysis today. Now, over the last year, they are up just over 4%. Over the last 10 years, if you've been holding this company, you'd be up 90%. It doesn't include those dividends reinvested, so bear that in mind. And we can see their all-time highs beginning of 2022 at just under $190. Now, they are trading towards the mid to upper end of the 52-week range. They do have a current yield of 2.26% and a forward PE of 14.75. Now, what we like to do is look at their revenue growth. Typically, we like to see 3 to 7% growth year on year. September 2019, 24 billion reported on their top line. September 23, their latest annual report, 36 billion. So we do see some nice growth. In fact, 50% growth over the last 5 years, which is very positive to see. But we do, on a more granular level, can see some inconsistencies. In fact, their top line decreased into 2020 before increasing to 2022 and then decreasing. So yes, their top line has increased over the last 5 years, but do note some inconsistencies year on year. Bottom line, the story is a little bit better. Their net income went from 4.4 billion to 7.2 billion, nearly doubling over the last 5 years. But again, we do note those inconsistencies, although it did increase from 2019 to 2022 before dropping to 7 billion. So both inconsistencies on the top line and bottom line. Nonetheless, they are increasing very nicely over the last 5 years. 50% on the top line, nearly 100% on the bottom line. Quick look at the balance sheet health check. 12.3 billion of cash and short-term investments in 2019. 12.1 in their latest quarterly report. So not much movement over the 5-year period. And when we compare that to their total debt numerically and directionally, what we can see, it's gone from around 15.9 billion to 15.5. So realistically, their cash and total debt hasn't really moved much over the last 5 years, and it doesn't look to be in bad shape. We will look at those financial debt metrics shortly too. Quickly looking at some competitors, Texas Instruments, Intel Corporation, Analog Devices, and a few others. Now, over the last year, QCOM is up around 7%. Now, it is one of the worst performing, but it does show you that the industry as a whole has performed very well. Intel up 44%, MU 38%, and Marvell Technology 39%. Now, when we extend that to the last 5 years, Qualcomm is in fact the second best performing, up 224%. Absolutely phenomenal, but do bear in mind past performance isn't an indicator of the future, and they were only really beat in the industry by their competitors Marvell Technology at 275%. Now, one thing we like to do is a quick look at insider buys, insider sales. Now, over the last 2 months, we do note some very large insider sales by the president and CEO, as well as the chief commercial officer on 2 instances. Now, these totaled over $3 million, but again, just something I want to highlight, especially for new viewers. Insider buying is a bullish signal. Management buy because they believe the share price will go up. Insider selling isn't necessarily a bearish signal. Insiders sell wide range of reasons, personal, financial. And in actual fact, the last 3 sales that did happen in fact, December and the beginning of January, the share price, as we can see, has gone up. So again, do take this with a pinch of salt, but we do like to draw out the insider sales. In terms of institutional buys, well, it sits at 71% in terms of ownership, 9 billion or just under sales over the last 12 months. The same period, 93 billion worth of buys. Institutions love this company. They love the semiconductor industry right now. And as we can see, the largest buy did come in Q2 of 2023. When we look at Q3, pretty much the same amount of buys as sells. Q4, quite a substantial amount more buying than selling. But over the longer term, institutions do really like this company. But don't forget, do your own due diligence. Don't just copy what these institutions do. Now, for those that missed their earnings just a few days ago, their revenue increased 5% year over year to just under 10 billion. Their earnings per share on a GAAP basis rose by 24%, on a non-GAAP basis 16%. So very, very positive. And as we can see here, they achieved a record quarterly revenue with a 31% surge. If you're looking at the handset revenue, grew by 16%. Shareholder return, 1.7 billion return through dividends and share repurchases. So very positive, lots of good metrics here. And looking forwards to FY24, they expect their revenue to be around 8.9 to 9.7 billion, with EPS of 2.2 to 2.4. So lots of great expectations for Q2 of FY24, as well as some strong numbers for Q1. So very nice to see for Qualcomm investors. Now, very quickly, there is an article here from Motley Fool. I just wanted to draw out one thing. They do talk about how this could be the next top AI stock for 2024. And what they talk about here essentially is that their business partner Samsung did announce a lineup of new devices featuring a lot of AI features. And the biggest thing to draw from this is that essentially they are all powered by high-end Qualcomm chips. So they do see this as one of the top AI stocks for this year. Now, in terms of the dividend safety score, it does sit at 80. It is safe. Market cap 158 billion. It is a mega cap company. In terms of those key recessionary metrics, well, they increased the dividend during the last recession. Negative 7% sales, but it is above the average growth. Remember, that sits at negative 12%. And they did significantly outperform the S&P, negative 21 to the S&P's negative 55. Dividend growth, I would say not too bad, 6.7% in March last year, so we are expecting an increase next month. It is above that minimum 4% inflationary target. Last 5 years at 5%, last 20 years very strong, 20% on average if you've been holding this company over the last 20 years is phenomenal, and they have been increasing those dividends for the last 20 years, so they're 5 years away from becoming a dividend aristocrat. In terms of dividend yield theory, we can see that reasonable valuation, 2.26, not too far off the 5-year average of 2.46. But we also note the 5-year average on the forward PE sits lower, 14.7 versus 15.9. Now, when we take a look at the sector PE, the information technology sits at 26.9. So Qualcomm is still heavily undervalued in relation to the sector PE. Now, when we take a look at the free cash flow payout, personally, earnings is susceptible to manipulation by management through accounting. We focus on the free cash flow. For me, 60%. You can go industry specific. For semiconductors, go down to 50%. The reason why I like 60%, it gives me faith that management are able to offer those double-digit increases. And what we can see here, the last few years, in fact, it has been well below 60%. 35 in 2021, 47 in 22, and 35% in the latest year. 2024 expected to go lower, so I would like to see a nice, at the bare minimum, high single-digit dividend increase for Qualcomm. Free cash flow per share, very nice to see, nearly doubled, 458 to 882. 2024 expected to go even higher. I do understand there is a lot of inconsistency year on year, but over the longer term, it is moving in the right direction, and that free cash flow per share does continue to increase. Now, whether you want to argue cyclicality or volatility of the semiconductor industry, we can see that Qualcomm has been all over the place. In the more recent period, the last 2 years, 21-22, strong double-digit growth. Although we do know in 2023, it did drop 19% as we discussed when looking at the financial statements. So something just to bear in mind, we can see the top line's gone from 27 billion to 36. Now, in terms of shares outstanding, we did mention they return a lot of cash to investor pockets. One way other than dividends is through their share buybacks. They've reduced the count from 1.71 billion to 1.13, so it is looking very positive for Qualcomm. Now, ROIC, we can see here double digits is what we love. We want a minimum of 10%, as that means management are able to effectively allocate their capital. It has dropped from the highs of 2022. Nonetheless, 23% in my opinion is very strong for Qualcomm, especially for a semiconductor industry. Margins very strong, above the minimum 16%. The last few years we did see some high 20s, low 30s. 2023 at the mid-20s is not bad at all. As long as it continues, then this company can be very profitable moving forwards. And as we did see, whilst their revenue increases nearly 50%, their bottom line net income is increasing at a faster rate. Free cash flow margin, absolutely phenomenal, very, very strong. This is a free cash flow machine. And one of my favorite metrics, the net debt to earnings before interest, tax, depreciation, amortization. This shows us the dividend safety as well as balance sheet strength. It would take them in 2023 0.35 years to pay off all of their debt net of cash on hand. Well, guess what? In 2024, it is expected to go even lower. So they have a phenomenal balance sheet and there are no real worries with that dividend at all. Now, before we just jump into the valuation of Qualcomm, just to let you know, we have released our latest article in the free weekly newsletter around yield on cost, whether or not size really matters in the dividend world. If you want to grab a free copy, click on the pinned comment below, sign up to those free weekly newsletters. The last few articles we've talked about undervalued companies with strong upsides, as well as running through our screener to find undervalued dividend stocks. So let's jump into the valuation model for Qualcomm. As always, if you enjoy the content, values being provided, smash that like button, hit the subscribe and bell button so you are continually notified of these videos as they drop. So let's jump into the first model. We have Graham's valuation. We have the stock ticker symbol, the earnings per share, long-term growth rate, and the AAA corporate bond yield. This gives an intrinsic value of $123. So we have a sign of overvaluation. Just bear in mind, we don't look at any of these models in isolation. We will conclude towards the end. We then have the multiples valuation model, companies in a similar sector and size. We have the average P multiplied by that of QCOM to get an intrinsic value of undervaluation, 15127 per this model. We then move on to the dividend discount model. Nice dividend increases in my opinion, 7% on average over the last few years. We've gone pretty conservative, 6.25. Now we can see we have a nice undervaluation signal as well based on that value, intrinsic value coming to 194. We then have the DCF model, the free cash flows year on year. Average growth rate 17%. We have gone lower at 10%, lower than analyst targets as well. In conjunction with the discount rate, we have the present value of future free cash flows and terminal value. Add together with the cash, subtract total debt, get to the equity value, divide by shares outstanding. Again, another undervaluation signal. So the intrinsic value is just the average of these four models for Qualcomm in today's episode, and it comes to $166. Now, as always, if you want to grab a copy of the valuation model, click on the pinned comment below so you can get to the intrinsic value as well as the acceptable buy price of companies in your own portfolio and that on your watch list. So we start off with a margin of safety of 10%, which is what we use if we believe it has a wide moat, strong financial metrics, good forward-looking data. At 15% is around 10 to 12 cents shy, so we do see a margin of safety of 15% for Qualcomm moving forwards. Now, in terms of what Wall Street forecasts with this company, they see upside of 17% over the next 12 months. They have a price target just under our intrinsic value at $165. As always, though, let us know your thoughts in the comments below. Is Qualcomm one of those stocks that you do see being one of the best AI stocks in 2024? Have you been adding over the last few months when it was at a lower price, or are you looking to add this onto your watch list for the future? As always, don't forget to smash that like button. I'll see you on the next one, and for now, take care.